Okay, so we see that Tesla stock is making a decent reaction today, and it is looking very nice. Now, you may say, oh, but Tesla is still dropping. How can this be a decent reaction? Well, that's what I'm going to tell you guys, and bear in mind that all my ideas are 100% based on technical aspects. Many other stocks are making decent reactions as well, along with the indices, and as I have been telling you guys in the past few days, now is the perfect time to see a bullish reaction happening on the stock market. So let's see what's going on here, but first, welcome to the Finance Hydra channel. My name is Nathan, so let's start our analysis looking at Tesla's daily chart. Here, on the daily chart, we see that we almost hit our technical support level at $240. 240. The 240 line over here was a previous support level from June, and in theory, Tesla is still seeking this support level. However, if it confirms a bottom signal right here, right now, without retesting this black line down here, probably we are going to see a bottom signal above this support level, which is also very good. But it is quite annoying to see that Tesla almost hit our support level and it is already reacting, right? I would be happier, honestly, I would be happier to see Tesla actually reaching the 240 before making a good, decent reaction, but still fine by me. We are trying to react right now. Oh, but Nathan, is this a crystal clear bottom signal? No, this is not a crystal clear bottom signal, at least not yet. If Tesla actually confirms a bottom signal in this area, then okay, I believe we are going to bounce to higher levels, possibly to the 270s again. Now, why a reaction around this area is so important right now? Because the broad market is at a critical support level. Look at QQQ, the Nasdaq ETF. Tech stocks are on the verge of reversing the bullish bias over here because the Nasdaq index has been doing nothing but higher highs, higher lows. It has been looking extremely strong right now. However, if we lose this support level, we're gonna make a lower high, lower low for the first time in many months on the daily chart. So it is very important to see the Nasdaq index above the support line at $372 in order to maintain the bullish bias on tech stocks in general. Now, the S&P is a little bit more problematic, but to me, it feels like we are just dancing around the 21 EMA on the daily chart, which is not necessarily good, but at least we are avoiding a sharper correction. Just like Tesla could drop to lower levels, I think, again, this is just my humble opinion over here as a retail trader. I think that SPY could have dropped to lower levels as well, maybe to retest the $444, $43 area over here, this black line. By retesting this support level, I would be much happier and more comfortable in buying stocks around this support level, but still, okay, we are trying to react over here. Again, it is not an amazing, incredible reaction, but maybe it is the start of something interesting. Now, if we take a look at other stocks, it feels like Tesla and Apple, right? These two are the only stocks right now among the mega cap stocks, among the big tech stocks over here that are actually dropping. The rest of the market is clearly green right now. So we see Apple crashing and Tesla is also dropping today, but at least it is trying to react. I like this candlestick over here. It looks like, I really like to see a candle with such a huge shadow under the candlestick's body, because this tells me that although the bears were quite strong, were quite optimistic over here during the day, the bulls appeared and they managed to push the price upwards again, leaving a huge shadow under the candlestick's body. This is a classic hammer candlestick pattern, right? And this is why it is very important to understand candlestick patterns, to understand technical analysis, because every single candlestick over here tells us a story. This is a continuous battle between bulls and bears, and by seeing such pattern above a clear support level while the Nasdaq index is also trading at such a critical moment, this is why I'm telling you guys, this reaction is decent. Tesla is looking nice today at least. Of course, we don't see any confirmation yet. As far as I know, Tesla could easily drop all the way down to the $240 again tomorrow in a blink of an eye, but still, this reaction is quite decent. The broad market, other stocks are looking quite resilient right now. Look at Microsoft over here. It is far from its bottom level, which happened on August 3rd over here. Google is also going up nicely. We couldn't even hit the 21 EMA on the daily chart, and Google is already reacting. This is very good. Amazon did such an amazing reaction after earnings, but then we saw a crystal clear shooting star candlestick pattern, a classic bearish reversal candlestick pattern which wasn't materialized yet. This is why I'm telling you guys, although we see a hammer candlestick pattern on Tesla today, this is not a crystal clear indicator that we are going to reverse. Yes, the situation is looking good, but we could drop from here, just like Amazon was looking very bearish last Friday after this shooting star candlestick pattern, and then we started to react. So this is why it is always very important for us to understand what is happening to the broad market right now. In order to understand how our individual stocks, how our individual investments are going to behave, we gotta understand the big picture. Now, if we take a look at Tesla's weekly chart over here, last week we did a bearish candlestick pattern, engulfing the one from the previous week over here, indicating that yes, Tesla is not reacting, and in spite of today's reaction, we don't see any crystal clear, amazing, bullish reversal structure yet. Of course, that I'm gonna keep you guys updated every single day on this. Therefore, if you are not my subscriber yet, consider subscribing, because I'm here every single day to keep you guys updated on Tesla and on other stocks as well. Now, the most important key points for us to watch are the support level at $240 and the 21 EMA, the 21 exponential moving average on the daily chart, because it feels like this key point over here, this indicator has been acting as a very strong resistance level for us since after earnings, when Tesla crashed over here, right? I mean, we tried to break the 21 EMA a couple of times over here, but in the end, it feels like it has been working as a consistent resistance level for Tesla stock. And as long as Tesla remains inside the 21 EMA, between the support level at 240 and the 21 EMA on the daily chart, it is going to keep trapped inside a trap zone, right? We all know that trap zones are very dangerous. We're gonna see many false signals triggered while we were inside these two support and resistance lines over here. So only a crystal clear breakout is going to bring something new for us on Tesla stock. Similarly, I see something similar on the S&P index over here. We gotta truly break the 21 EMA and preferably break Friday's high over here in order to reject this bearish candlestick pattern over here, all right? So, of course, again, I am going to keep you guys updated every single day in this, so subscribe, click on the like button to support me. Thank you very much for your audience, my dear friends. Stay safe. Bye-bye.